Hello dear students, welcome to my channel Bhavani Commerce Academy. If you like my videos, share to your friends also. Subscribe my channel. And today's class is fourth problem of funds flow analysis. Let's see. From the balance sheet of XYZ Limited, make out a statement of sources and application of funds and schedule of changes in working capital. Here asking sources and application of funds and schedule of changes in working capital. And here given 2 years balance sheet, that is 2021 and 2020. So 2020 is the previous year, 2021 is the current year. So latest year is the current year and previous year is 2020. Here given particulars, under particulars we have equity and liabilities. Under liabilities we have shareholders funds, non-current liabilities and current liabilities. Under shareholders funds, we have share capital, reserves and surplus, statement of profit and loss. Non-current liabilities are debentures and current liabilities are trade payables, that is nothing but creditors. Okay, from assets, we have non-current assets and current assets. Under non-current assets, we have fixed assets only and there is no segregation of fixed assets. Current assets are inventories, that is nothing but stock, trade receivables, it is also called debtors, short-term investment, cash and cash equivalents. These four are the current assets. Given additional information, provision for depreciation on the last day of 2019-20 was 50,000. The same on the last day of 2020-21 was 60,000. During the year 2021, a machine costing 30,000. For that 30,000 worth machine having depreciation is 10,000 was sold for 16,000. This information is belongs to fixed assets. So that we need to maintain fixed assets account in the working notes because depreciation is related to fixed assets, machine is related to fixed assets. Let's see working notes. Under working notes, we need to maintain the fixed assets account. Fixed asset shows debit balance. So asset shows debit balance, liability shows credit balance, all we know. So we need to write opening debit side, closing credit side. After that, you need to find out the profit or loss of that addition machine. So for the addition machine cost is 30,000. Here we have a procedure for the calculation of profit or loss of that addition machine. So what is the procedure we need to write here? Machine cost minus depreciation, you will get book value. Book value minus sale value, you will get profit or loss. Here given machine cost is 30,000 and depreciation is 10,000. 30,000 minus 10,000, you will get 20,000. That is nothing but book value. From the book value, you need to deduct the sale value. 16,000. So 20,000 minus 16,000, you will get 4,000. So this 4,000 is profit or loss. How to decide? If book value is more, sale value is less, that will be loss. If book value is less, sale value is more, that is profit. So from our question, book value is more, sale value is less, then it will be loss. So loss on sale of machine. So from this information, you need to take depreciation, sale, loss on sale of machine. These three values you need to post in the fixed assets account. Okay, in the fixed assets account, what we should take? Depreciation. Depreciation is always credit side of the fixed asset account because the entry of depreciation is depreciation account debit to fixed assets account. While preparing fixed assets account, we need to write by depreciation, that is 10,000. And next, sale value. Sale value also credit side of the fixed assets account. Why we should write credit side? At the time of sale, we are receiving cash. Our asset is going out. At that time, our entry will be cash account debit to fixed asset account. Because cash is coming into the firm, asset is going out. What comes in debit, what goes out? Credit. We are preparing fixed assets account, then we should write by cash. So I am writing here by cash, that is credit side, in bracket sale, that is 16,000. After that, here loss on sale of machine. So loss of sale of machine, where we should write? It is also credit side. If it is profit, that will be debit side. So loss on sale. What is the amount? 4,000. After writing these three details, here given provision for depreciation also. If there is no provision for depreciation in the additional information, do the balance of fixed assets account. But here given provision for depreciation, so that you need to take the provision for depreciation in the fixed assets account. What is the provision for depreciation? 50,000 and 60,000. So depreciation comes credit side of the fixed assets account. Yes. So by provision for depreciation, 60,000 minus 50,000. So what is the difference amount here? 10,000. Okay, this 10,000 belongs to additional mission, and this 10,000 belongs to existing assets. Okay, both are not same. Okay, do the balance. So which side is more? Credit side is more value, because 2 lakhs plus 10,000 plus 4,000, 16,000 plus 10,000, 2 lakhs 40,000. 2 lakhs 40,000 minus 2 lakhs will get 40,000. What is this 40,000? To cash in bracket purchase. Balancing figure. If your balancing figure is debit side, when you will get debit side balancing figure, if credit value is more, you will get debit side balancing figure. If debit value is more, you will get credit side balancing figure. In this question, we have credit side is more, then our balancing figure is debit side. If your balancing figure is debit side, that will be purchase of fixed asset. From this information, depreciation we need to post in the second statement, that is funds from operations we need to add. Okay, and the cash sales will comes under sources side of the third statement, and loss on sale of a fixed asset will comes under funds from operations second statement. We need to add provision for depreciation, it is also we need to post in the funds from operations adding item, and ignore the opening and closing balances, and this cash purchases will comes under purchase of fixed asset will comes under application side of the third statement. And first statement is schedule of changes in working capital. In the schedule of changes in working capital, we have particulars column, previous year, current year. From our question, 2020 is the previous year, 2021 is the current year, and here we have working capital, increase column and decrease column. So changes in working capital having current assets and current liabilities. From our question, what are the current assets? Already here given directly current assets, inventories, trade receivables, short-term investments, cash and cash equivalents. These values I have wrote. So current year values and previous year values. Okay. And next, take the total of current assets. Then we need to write current liabilities. Under current liabilities, we have trade payables only. Current liabilities, trade payables. 1,25,000, 1,80,000. Previous year 1,25,000, current year 1,80,000. Okay. Our total of current assets in the previous year 1,85,000. Current liabilities are 1,25,000. The difference between the current assets and current liabilities 60,000. 1,85,000 minus 1,25,000 will get 60,000. So that is nothing but working capital. In the same way, for the current year also, total current assets are 3 lakhs. Total current liabilities are 1,80,000. 3 lakhs minus 1,80,000, you will get 1,20,000. After getting these values, which side is more? Current year is more. Current year 1,20,000. 1,20,000 you need to write here. Again you need to write in the previous year column also. So because more value, we need to write both sides. 1,20,000 minus 60,000 will get 60,000. Okay. After that, you need to fill these columns by using 4 rules. What are the 4 rules? Already we know current assets are increase, working capital also increase. Current assets are decrease, working capital also decrease. Current liabilities are increase, working capital decrease. Current liabilities decrease, working capital increase. So this is the same direction and this is the opposite direction. For current assets point of view, working capital also same direction. For current liabilities, working capital is the opposite direction. Okay. See here, we have stock. Stock is also nothing but inventories. So last year 80,000, this year 1 lakh. Here increased. How much increased? 20,000 increased. Increased means here also you need to write in the increase column because current assets are increased, working capital also increase. In the increase column 20,000. Decrease column nil. Debtors or trade receivables 15,000, 30,000. Compared to last year, this year 15,000 increased. So in increase in current assets means working capital also increases 15,000. Short-term investments 50,000 last year and this year 1,20,000. Here also increased. How much increased? 70,000. Right in the increase column. And cash and cash equivalents 40,000, 50,000. Here also increased 10,000. Okay. And coming to liabilities 1,25,000, 1,80,000. 55,000 increased. So current liabilities increase means working capital decreases. So in the increase column nil, decrease column 55,000. Okay. So do the balance here also. Which side is more? Increase is more. Increase column is more. How much it is? 20,000, 15,000, 70,000, 10,000. 1,15,000. So 1,15,000 write both sides because we are doing balance. 1,15,000 minus 55,000. 60,000 our balancing figure. See here. These two columns balancing figure is 60,000 and these two columns balancing figure is 60,000. So if it is equal, our answer is right. Okay. And our answer 60,000 in decrease column. What we should write? Increase in working capital. If your answer in increase column, decrease in working capital. Opposite you need to write. So now our answer is net increase in working capital. Okay. WC means working capital. Our second statement is funds from operations. Under funds from operations, we need to write net profit. But net profit is not given in the additional information. Then next preference goes to profit and loss. This profit and loss is available in the balance sheet liability side. Let's see. Balance sheet liability side we have reserves and surplus. Under reserves and surplus we have statement of profit and loss. We are given 2021-2020 balances. In the last year we have loss because it is given in the bracket. So 40,000 loss is there, and this year, current year, we have 20,000 profit. So how to write this balance? See here, generally we will write closing balance minus opening balance. So what is the closing balance? Current year balance is closing balance. Our current year balance is 20,000 because 2021 is the current year. Our balance of profit and loss in the year is 20,000. So 20,000 minus opening balance means last year. Last year we have loss. How much loss is there? 40,000. So it is in the bracket. That is nothing but loss. So 20,000 minus 40,000 loss. So bracket indicates minus figure. Minus plus. That means 20,000 plus 40,000. Okay, so this 40 plus 20, 60,000. If you got 60,000 profit only, last year loss you covered. So that this year profit is 20,000. Okay. Then we need to add those items to be added. What items we need to write here? Already we have fixed assets account. In the fixed assets account, we have depreciation that should be added in the funds from operations, and also loss on sale of asset. Okay, and provision for depreciation. These three items we need to write in the funds from operations. Depreciation 10,000. Provision for depreciation 10,000. We can write both combinedly also. And loss on sale of asset. Loss on sale of asset. How much loss is there? 4,000. Okay. Any other items to be added? Other items means general reserve. In the balance sheet there is no. Under balance sheet liability side we have share capital is there. Share capital will comes under funds flow statement. So where we should write source or application, it depends on given information. So see, last year 1 lakh share capital is there and this year 2 lakh share capital is there. That means 1 lakh increased. Increased means issue. If it is issue, that will comes under source. So write under sources. Issue of share capital 1 lakh. And after that, under reserves and surplus we have statement of profit and loss. Already we taken in the funds from operations. Non-current liabilities here given debentures. So last year 2 lakhs and this year 1 lakh. That means decreased. How much decrease? 1 lakh. Decrease means redemption, repayment. If you pay only, the amount will be reduced. So that this is repayment. Repayment will comes under application because our cash is going out. We are repaying that amount. Repayment of debentures 1 lakh. Okay, and after that current liabilities already be taken in the first statement. And coming to assets, non-current assets, fixed assets, already we wrote in the working notes. If you have working notes, don't check whether it is increase or decrease. If there is no working notes, regarding the asset, then we need to check whether it is increase or decrease. According to that, you need to post in the funds flow statement. But we have a working notes regarding the fixed assets, so that by using that working notes only you need to post those details. Then current assets. Current assets already be taken in the first statement. Okay, all details are completed. Now close the third statement. So 1 lakh 60 plus 40 1 lakh 1 lakh 1 lakh 2 lakhs. Okay, and 84,000 plus 16,000 1 lakh. 1 lakh plus 1 lakh 2 lakhs. See here, sources are equals to application, like balance sheet, funds flow statement. Under balance sheet, assets are equals to liabilities. Like that only, sources are equals to applications in the funds flow statement. So our answer is right. Thank you. Any other items are there? No other items, because in the balance sheet liabilities side there is no general reserve. If you have general reserve, that difference amount you need to add here. And if you have intangible assets are there under asset side, but there is no intangible assets like goodwill, patents, copyrights. If the value of intangible asset is decreased, that value you need to add here, but there is no intangible assets. And there is no profit on sale of asset. If you have profit on sale of asset, that should be deducted. So those items are not available from this question. So close this. So 60,000 plus 10,000 plus 10,000 plus 4,000, you will get 84,000. That is funds from operations profit. And the last statement is funds flow statement. It is like balance sheet. There is no debit, there is no credit, and there is no to, there is no buy. Here we are writing left hand side sources, right hand side applications. First we need to post first statement and second statement answers. You have to remember, very important point. First we need to post first and second statement answers. What is the first statement? Schedule of changes in working capital. What is the answer here? Net increase in working capital. Where we should write this answer? If it is net increase in working capital, that will comes under application side. Already we have format regarding the funds flow statement. So if you want that format, once you check my channel, it is available in our channel. Okay. Net increase in working capital. How much? 60,000. And second answer, that is second statement answer is 84,000, that is profit, funds from operations profit. Where we should write funds from operations profit? Sources side. $80,000. 84,000, sorry. Okay. And next, after writing these two answers, you need to check the working notes. Buy cash, sale. Sale of fixed asset will comes under sources. Sale of fixed asset will comes under source. What is the amount of sale of fixed asset? 16,000. Here we have leftover balance is 40,000, that is purchase of fixed asset. Where we should write purchase? Application side. Purchase of fixed asset. Why we should write purchase of fixed asset application side? Because at the time of purchase our cash is going out. So cash is going out means outflow of fund. So if your cash is going out, that will be application. If you are receiving cash, that will be source. At the time of sale, we are receiving cash. So that sale of fixed asset will comes under source. Purchase of fixed asset will comes under application. So what is the amount here? 40,000. Okay. So all the details are completed. Yes. Depreciation over, sale over, loss on sale of asset over, provision for depreciation over, and purchase of fixed assets over. Opening closing balance will be ignored while post details. After writing these details, once you check the balance sheet. Under balance sheet, liability side, we have share capital is there. Share capital will comes under funds flow statement. So where we should write source or application, it depends on given information. So see, last year 1 lakh share capital is there and this year 2 lakh share capital is there. That means 1 lakh increased. Increased means issue. If it is issue, that will comes under source. So write under sources. Issue of share capital 1 lakh. And after that, under reserves and surplus, we have statement of profit and loss. Already we taken in the funds from operations. Non-current liabilities here given, debentures. So last year 2 lakhs and this year 1 lakh, that means decreased. How much decreased? 1 lakh. Decrease means redemption, repayment. If you pay only, the amount will be reduced. So that this is repayment. Repayment will comes under application because our cash is going out. We are repaying that amount. Repayment of debentures 1 lakh. Okay. And after that, current liabilities already be taken in the first statement. And coming to assets, non-current assets, fixed assets, already we wrote in the working notes. If you have working notes, don't check whether it is increase or decrease. If there is no working notes, regarding the asset, then we need to check whether it is increase or decrease. According to that, you need to post in the funds flow statement. But we have a working notes regarding the fixed assets, so that by using that working notes only, you need to post those details. Then current assets. Current assets already be taken in the first statement. Okay. All details are completed. Now close the third statement. So 1 lakh, 60 plus 40, 1 lakh, 1 lakh, 1 lakh, 2 lakhs. Okay, and 84,000 plus 16,000, 1 lakh, 1 lakh plus 1 lakh, 2 lakhs. See here, sources are equals to application, like balance sheet, funds flow statement. Under balance sheet, assets are equals to liabilities. Like that only, sources are equals to applications in the funds flow statement. So our answer is right. Thank you.